Jesse, we've got our colleague in from Nashville today, Greg Miller.
Glad to have you, Greg. Welcome, man.
It's great to be here.
So, guys, we want to talk about the NASDAQ a little bit today. It's been a bull market for the NASDAQ, up a little over 20% year-to-date so far. Past 2 years have been pretty good as well. NASDAQ's been around since 1971. So what do we think about a year 4 bull market for the NASDAQ?
Yeah, well, our friends at Data Trek broke down some analysis on uptrends of the NASDAQ composite, and there were a number of years since 1975 where the NASDAQ composite ended its bull run after 2 years. But if it makes it 3 years,
made it longer.
Yeah, if it makes it 3 years, it's more likely that it goes 4 or 5 or 6 years. Year 4 is the question mark. If we go to this next chart, we see the periods where the NASDAQ ended its bull run in the 4th year, 94 and 22 as kind of the highlights there being negative.
So if you average them all, it's about a 5% average annual return, but there are 2 negative years in there.
Yeah, 94 and 22 both had huge rate increases.
Yeah.
Yeah, I mean, definitively they did, and I would say 26 is not forecast to have rate increases.
You wouldn't think. I mean, rates went up 3% in 94 from 3 to 6%, and then 22 they went from 0 to 5.25. I mean, that's not happening.
That's right.
So, I mean, if you take those out of the equation and look at the rest of them, I mean, 98 obviously pulls you way to the upside. But, I mean, 78, 2006, 2015, I mean, all decent bull market kind of years.
Definitively. And, I mean, not to suggest that next year looks like 98, but I think the technological revolution that we find ourselves in, AI versus the internet, would indicate that it might be more like a 95 to 99 period.
You would. And if you look at this next chart from a consumer sentiment standpoint, I mean, consumer sentiment in the 90s was really high, and it's not today. In fact, it's really at almost lows, and in fact, areas where, I mean, you would consider it almost recessionary.
You would think that we're in a recession based on consumer sentiment, so I'm not sure if that scale's broken, but if we go to the final chart today, our friend J.C. Peretz talks about how, you know, from a 10-year rate standpoint, we are exactly where we were in October of 22.
So the 10-year yield is sitting exactly where it was in October of 22, and what's happened since then?
Good things on the market. And he says the Dow's up 50, the S&P's up 80, and the NASDAQ is up 125%. So point is, not a whole lot to get too bearish about right now about the NASDAQ or big tech.
Agreed.
I agree too.